Hey everyone, and welcome. Today, we're going to tackle something that can look super complicated, but is actually way simpler than you think once you know the secret. We're talking about stock charts. We're going to learn how to turn all that visual noise into something that makes perfect sense.
Yeah, I get it. You look at something like this for the first time, and it just looks like total chaos, doesn't it? A crazy mess of lines, colors, and spikes. It's enough to make you want to just close the tab and walk away.
But here's the thing. What if it's not chaos at all? What if it's just a language? A visual language that, once you learn a few key words and a little bit of grammar, starts to tell a really clear story.
All right, so the very first thing you need to look for, and I mean the most important word in this whole language, is the trend. This just tells you the main direction the price is moving. It gives you the big picture context for everything else you're about to see.
And honestly, the idea here is super simple. An uptrend, that's just a series of higher peaks and higher valleys. The easiest way to picture it is a ball bouncing its way up a flight of stairs. And a downtrend? You guessed it. It's the exact opposite. That ball is just bouncing its way right back down.
So really, when you get right down to it, the market is always doing one of three things. It's either trending up, trending down, or it's kind of just chilling out, moving sideways in a range. Your first job, every single time, is to figure out which of those three is happening right now.
Okay, so if the trend is the main word in the sentence, the next step is to learn the grammar. And the grammar of a chart? Well, that's all about finding the invisible floors and ceilings that the price seems to respect.
Let's start with support. Just think of it like a price floor. When the price drops to a certain level, a whole bunch of buyers suddenly see a bargain and they jump in. This wave of buying creates a literal floor that often makes the price bounce right back up.
And resistance is just the opposite. It's the ceiling. As the price climbs up to a certain point, people who bought it way cheaper start to think, maybe it's time to sell and take my profit. All that selling acts like a ceiling, and it can stop the price dead in its tracks.
This is where that bouncing ball idea really comes to life, especially in a sideways market. The price can literally look like it's trapped, just bouncing back and forth between the support floor and the resistance ceiling. It's a game of tug-of-war between buyers and sellers, visualized.
All right, we've got the big words and we've got the grammar. Now it's time to zoom all the way in and look at the individual letters that make up this language. I'm talking about these little things called candlesticks. Each one tells a tiny story about the battle for control.
And they're not as complicated as they look, I promise. The big fat part is the body. That tells you where the price started and where it ended. Green means it went up during that time, red means it went down. Simple. And those little lines sticking out, the wicks, they just show you the most extreme high and low points the price hit. That's it.
Okay, moment of truth. We've learned the letters, we've learned the words, and we've learned the grammar. Now let's put it all together and actually read a full sentence on a real chart. So here we go. Don't worry about what company this is or what it does. That doesn't matter for this. Our only goal here is to use our brand new language skills and see what story this chart is telling us. First things first. What's the general direction? If we just kind of step back and look at the whole picture, we can clearly see a pattern of higher peaks and higher valleys. So the main word here is definitely uptrend. Now for the grammar. Even inside this big uptrend, we can still find those floors and ceilings. See how the price recently shot up to this level and then just stalled? That was a temporary ceiling, a resistance point. Then it pulled back to this lower level and bounced right off it. That was our floor, our support. And finally, let's read the most recent letters. What are the newest candles telling us? Well, right after bouncing off that support floor, we're seeing some pretty strong, solid green candles. That tells us buyers are stepping back in with confidence, defending that uptrend. See? It's a whole story. So, the big takeaway here is really important. Learning to read a chart is not about predicting the future. It's not a crystal ball. Think of it more like a map. It's a map of where the price has already been, which helps you make a way more informed guess about the most probable path forward.
You know, when you really think about it, what you're looking at on a chart is just a visual record of human psychology. Every single trend, every single candle is a footprint left behind by the massive, collective forces of fear and greed that drive the entire market.
By learning this simple language, you're not getting a crystal ball. You're getting something much better. You're getting a map and a compass. You can now start to navigate this landscape with a whole new level of understanding. So the only question left is, where are you going to go first?